Hey Ben, can you hear us?
Hey, yeah, I can hear you.
Wow, an honor to meet you, sir. Thank you so much. Welcome to Because Bitcoin and its segment Crypto World Radio. It is my honor, sir, to introduce you to our audience. I've been working to collaborate with you and speak with you for a couple of months now. I've been following you for years. I admire all the content that you've put out throughout the last few years, and truly a pleasure to have you here. Welcome, 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 sir. Welcome.
Thanks for having me, and sorry I'm late. um, I was our our babysitter had to cancel today, so I was trying to figure stuff out with my kids.
No problem. No problem. No problem. Max, are you there, brother?
I'm here, Wabi. Ben, it's great to be speaking with you. Actually, I'm a huge supporter and fan of your work. I'm gonna put this tweet into the nest. I've been an Into the Cryptoverse premium subscriber for a couple years now, and I hung out with you for a second at your party last April. And actually, this was before. First of all, my name is Max. I'm the CEO of Because Bitcoin, the host of this space. At the time, I remember I was talking with you and Altcoin Daily, who was at your party, about wanting to start something in the world of crypto. I had 50 followers on Twitter. I didn't have Because Bitcoin yet. I was still working a real estate job, but crypto is my passion. Actually, speaking with you and Aaron at your party motivated me to start Because Bitcoin. And literally within like 2 weeks of meeting you and attending your party, Because Bitcoin was born, and haven't looked back ever since. So I just want to say I have the utmost appreciation and respect for who you are and what you do for this space. And I really I owe a great deal of credit for starting this, being inspired by what you've built. So Ben, I couldn't be more thrilled to have you on Because Bitcoin space as a guest. So thank you.
No problem. Thanks for having me, and yeah, it's really cool that you started something. Um, these these bear market recovery year times are definitely the best time to build. So I think you're doing a great thing, and I mean, I think, the market conditions are not super great right now, but, I mean, Bitcoin will come back around eventually. And I think that the people that are building now will be rewarded.
Yo, what's going on, Ben? I'm the newest member of Because Bitcoin. My name's Grant, and I also just want to say it's such a pleasure to talk to you. I've been watching your videos forever, and you've really basically improved my knowledge of the whole space by incredible margins throughout your time making videos. And it is truly a pleasure to talk to you. I'm so excited, man. I'm pretty geeked right now just having you up here.
Cool. Well, I'm happy to talk or answer any questions you guys have. Um, yeah.
All right, without further ado, ladies and gentlemen, let's get started on today's segment of Crypto World Radio with today's special guest, none other than Ben Cowen from Into the Cryptoverse. So, Ben, here on our show, we like to get to know our special guests as we introduce them to the community. And so we'd love to get to know you as far as, like, what got you into crypto and things like that. So I guess my first question to you, sir, is how did you come across Bitcoin, Ethereum, and the like? Like, how was that first onboarding experience?
Yeah, it's a good question. It was like a really slow process. It started because so my undergrad was in mathematics. This was I went to college back in 2008 to 2012, um, and it was like I believe it was my junior year of college. I think it was my junior year. It's hard to remember exactly, but I took a cryptography class. It was like an elective that you could take as a math student, and I was really interested in cryptography at the time, and a lot of it involved programming different things or cracking the code with different using different methods, and it was sort of through that I first learned about cryptocurrency. Because it, 10, 15 years ago, if you were talking about, crypto or crypto things, it didn't necessarily mean cryptocurrency. It could have meant other things. But that was when I learned about it. Now, unfortunately, I was not an investor at the time. I wish I had been. But the truth is, even if I had invested anything back then, um, it would have been a relatively small amount. I mean, I was just a poor college kid. It's not like I had a whole lot of money to put into speculative, super speculative markets like Bitcoin. But that was when I first learned about it. And then I got a little bit more involved and followed the market a lot more after I went to graduate school. So I graduated again in 2012, and then I started a PhD in nuclear engineering from 2013 to 2018. And I followed the markets a lot more closely then. And watch the market go up, watch everyone get wrecked coming on the way back down, and then I learned a lot. And then in the next cycle, we had the cycle that came after that. The ICE, the ICO cycle, everyone's creating ERC20 tokens, and that was really when Ethereum launched back in 2015. And then that was an interesting cycle because as much as I seem confident about crypto now, like I still wasn't super confident about everything back in 2015. I mean, you have to think back to then. Bitcoin was still at like a couple $100. I think Ethereum, when I was first really looking at it, it was only a few dollars. And it's easy to look back in hindsight now, and it always seems so obvious. But at the time, we watched Ethereum go from $7 to like $14, and then it crashed back down, I think, to $7 again. And it didn't really seem like we had to go up into $20,000, but it eventually did come, and the people that invested were rewarded. And I mean, I did a little bit better, and I took some profits, not as much as I would have liked to, but I learned some lessons along the way. You get a little bit better each time, I guess. And then and then so in 2018, I finished up my dissertation, and then I was a postdoc at a national lab, and I really wanted to start something so similar to what you're doing now. Like it was essentially just 4 years ago. I mean, really, just 4 years ago, I decided, hey, like I want to start. Actually, I decided it in like 2018 that I really wanted to start something. But I couldn't start it right away because I just started a postdoc, and I had to spend all my time, like just my mental energy, just thinking about that. Um, and I mean, I certainly thought about crypto, but I didn't really have the mental capacity to, go out and talk about it in front of like a lot of people and make regular content and stuff like that. So I waited. I waited about a year, and in 2019, after I'd been doing my postdoc for about a year, I decided, hey, like why not start a channel? I've been wrecked, burned so many times in the cryptoverse. Maybe I can offer an opinion that will help other people. And I certainly haven't been perfect with everything, but I'd like to think it's been somewhat helpful for people to follow at least my train of thought. And I mean, initially when I started it, it was a really small thing. It took me about like 6 months to grow to 500 subscribers on YouTube. 6 months, and and then it just took off, right? I mean, the bull market started, and the rest is history. And I mean, sort of like right place, right time. Um, you could argue that there's elements of luck involved. I mean, it's not like a lot of us knew that the Fed was going to print $6 trillion uh, back in 2020, but that's what happened, and the market went up a lot. We went to $69,000, and now we're sort of just in our recovery, trying to recover from all the hype. Of course, it occurred back then. So that's essentially my story in a nutshell.
Beautiful, Ben. Beautiful. So I noticed with a lot of the content that you put out, you have a lot of good data models like logarithmic regression bands and all that and all those sort of things. How did you come across making those models? Because it was originally through channels such as yourself that I discovered, a new look on data. And now, fast forward to 2023, everyone's using Glassnode, Nance, and a lot of these other features. So, I consider you one of the first few pioneers when it comes to getting data from the crypto market and applying that in a very unique fashion to, as you say it, navigating the cryptoverse. So I'd love to know what brought the inception of a lot of those data sets that are now like a part of your brand.
Yeah, so the logarithmic regression stuff was around. I mean, like, I wasn't the first person. I mean, I surely wasn't the first person to create a logarithmic regression model on Bitcoin. Um, I know other. I don't know who the first one was, but I'm not the first one to do that. I think I was probably one of the first people to really try to make risk models. And I mean, again, I'm not saying that I was the first one there, but what I recognized was, there's got to be a way to just sort of quantify the risk on Bitcoin based on what is historically done, but also incorporating diminishing returns. Because if you don't incorporate diminishing returns, then you essentially run into this issue where you always, your expectation for a future cycle is always going to be dependent on the ROI that occurred in the cycle before it. But as we've seen, time and time again, every cycle's returns are somewhat tempered compared to the cycle before it. And so, I just wanted to come up with a model to try to help model, to help model something like that. Like, how do we know when the market is getting overheated, and how do we know when it's super undervalued? Because no one really ever wants to buy when the market's low, and no one really wants to sell when the market's high, and it's hard to do both of those things. So I just figured, rather than trying to guess and spend too much time guessing, why not just create a model to sort of show you the risk on Bitcoin, and show you the risk on the total market. And then, rather than, dollar cost average, where you just sort of put in the same amount every week or every month, you put in more the lower it goes. So, like, you sort of you keep a heavy cash stack when you first identify the, sort of the onset of the bear market. You just start aggressively stacking as much cash as you can, and you keep doing that. And then, once you get to a low enough risk level, then you start to slowly move into the market. And if we go down to even lower risk levels, then the idea in a perfect world is that you'd have the money to sort of double up on your DCA, or triple up on your DCA, depending on how low it goes. And so that's sort of the idea. So like a real world scenario could be like, Bitcoin's first capitulation back in June, when it went to 17 and a half. That could be like a time to start a DCA. And then on its secondary capitulation to 15.5, it'd be a good, like a good example would be to double it up or something. And if we go put in a new low, like say later this year, which no one really knows if it's going to happen or not, but if it does, the idea is to say triple up, right? And so the idea is you just keep doing that, until the risk levels go back up. And history shows us that eventually they will. And and you know and then you have to do the reverse, which is hard. It's really hard to sort of convince people that, hey, there is a time to sell crypto. It doesn't. It's hard to communicate that all the time. But we don't really spend that much time in the upper risk bands. I believe this last cycle, we only spent about maybe 2 or 3 days in the highest risk band, and it actually occurred in the first peak of 2021, not the secondary peak. I think the secondary peak threw a lot of people off guard. And so, that was the whole idea, was, hey, let's just come up with a risk model to sort of identify the risks within the cryptoverse. And rather than, think too much about all the events that go on a day-to-day basis, I think today about all the macro events that are going on, the geopolitical things, right? The idea is, rather than spend too much time concerned about that, you just sort of DCA blindly when the market's undervalued, and you just wait for it to go back into price discovery.
Ben, so following up on what you just said about the double peaks in 2021, a good similarity that I find between both tops and both bottoms is that they were both deviations, right? 17K was our June low, and then that slight deviation in November. And one thing that those two bottoms had in common was that they had experienced one of the largest amounts of selling in Coinbase history. I believe the June low was the largest 4 hour volume bar in Coinbase history within a 4 hour time frame, and then the FTX low was the highest sell volume day in Coinbase history, where I think the number was close to 200,000 close to 200,000 units of Bitcoin were sold on the market that day. So my question to you, Ben, is regardless of what's going on in the macroeconomic stage, do you believe that that event, right, in November with FTX and all those things, and having it on record that, close to 200,000 Bitcoin was sold onto the market, do you believe that that was our capitulation, even though Mr. Cowen, we didn't have that crazy, minus 40% down days that we had experienced in 2018 and 2019? Would love to know your insights and what your models have stated and things of that nature.
It's a good question. So, um, back in the summer, it was difficult, and I'll certainly answer your question. But to sort of start off with my line of thinking, back in the summer, in like June, July, August, September, there was this argument or sort of debate between sort of the bulls and the bears as to is 17.5 the bottom. And my thinking at the time was people are falling for the same trap that they fell for in 2018, and the trap that I fell for in 2018. And in 2018, I thought 6K was the bottom. I was not in the camp that we needed to go any lower than $6,000. Like we've already been wrecked enough. Why does it need to go lower? Um, and so I was looking at it and I was like, well, it seems to me like we need to have another capitulation, right? Like we need to see a flush out after the third quarter, where in the third quarter you typically get this like bear market rally. We saw it in 2018. I think we saw something similar even in 2015 around that time, followed by another flush out just before the next bull market. But so I was of the opinion that 17.5 was not the bottom. And what I said back then, and kind of where I am right now, is I said the next low at least has a chance of being the final low, but worst case scenario, it'll be the low after that. And the only reason I put any weight into a low after that is, what if this is the first recession that Bitcoin experiences? And so, to sort of a counterpoint to what you said, and again, I'm not, I certainly don't know what's going to happen, but if you think about what happened in January of 2021, and do you remember we had that spike up to 42K or something like that? It was maybe around 40K or something, and then we had a pullback back down to like 30 something, or 29K or something like that, and then we had a distribution phase, right? So you could have argued that was sort of like a blow off top under some aspects. Or if you look at long term holders, a lot of long term holders were selling into the rally to 42K. And I was one of them. I mean, to be completely honest, I was one of them. I sold a lot of my Bitcoin to Ethereum because normally after Bitcoin goes parabolic like that, it just all floods back into the altcoin market. You see altcoins go up, you see Ethereum go up, you get your Ethereum tsunami where it goes up like 2x in about 2 weeks, and that happened in like April or May. And so that was where I was. I was like, well, there's a chance that was sort of the blow off top, and then you get this distribution phase, this long distribution phase. And so I guess the question today is that initial capitulation, and it's basically the only significant capitulation that Bitcoin has had in the bear market, was really back in June when it went down quite a bit, and it went down all the way to 17.5K. And I think you said it was quite a lot of volume that came in there. So the thing that I sort of wrestle with is sort of the FTX crash. Is that sort of the first accumulation range, right? And do you get another one later on this year where you might revisit those lows, or even maybe go to a slightly lower low, similar to sort of that? So it's sort of along the same line of thought as to what you said, but just sort of speculating on, is 42K, is the rally to 42K more similar to, say, the 17.5 drop, and then the FTX crash was sort of the first chance to accumulate, and then the next one would be sometime later this year. If you look to 2015, we had a double bottom, and the double bottom came in the third quarter of the year. And if you look at the 2018 bear market, 2019, you wrecked both the bulls and the bears, and then we had sort of like a higher low in early 2020. So what history shows us is that from a time-based perspective, you could argue that a fairly typical bear market for Bitcoin has run its course. I mean, the first bear market or the second bear market, we had a bear market earlier on, like, in 2011, but the first bear market after that we had in 2014, and that bear market lasted about 15 months, like 14 months or so. The second bear market after the 2018 one, or after the 2017 peak, was about 12 months. And so this one, having gone from November to November, it's about 12 months. So it's a pretty standard bear market, by all things considered, it's a pretty standard bear market. And with that in mind, I don't really think there's any reason to not have a position in Bitcoin, and this is why I say, right, like, DCA is your friend at low risk levels. When we go to low risk levels, you want to be DCA. And one of the things that people should think about is, even the people that bought, say, at 20K back in the summer, even though we eventually went lower, we still then went higher again, right? Like, we're higher today than we were back in the summer. So where I am right now is, I'm sort of in the camp of, the lows they could be in. The main reason they might not be is if we go into a recession. So, I have three different main risk models that I look at. One's based on price, one's based on-chain data, and then one is based on social data. The price data and the on-chain data have already gone to low risk levels, right? They've already gone to some fairly low risk levels. The only one that has been a little bit more stubborn is the social risk. And my interpretation of that is because, if we think about the nature of 2021, and I think, as you said, or you sort of alluded to, there wasn't really a blow off top in 2021 in the same way that there was in 2013, and the same way that there was in 2017, right? It was more of a distribution phase, and it lasted about a year. So then my question is, or something that I think about is, one reason that the social risk might be so elevated is because, people had a year to sort of go full degen into the crypto market and make money. They had a full year to just do that, right? Throw a dart at the wall, and any given altcoin is probably going to go up, just because, there's a ton of money printing, and asset prices go up when the Fed prints trillions of dollars. But it takes a long time to convince these people to leave. And, in 2018, it took about a year before the social risk to go back to zero. And despite how brutal 2022 was, the social risk is still in a downtrend, and it has not yet reached a convincing bottom. And what's interesting is, despite the fact that we just had a 60% pump by Bitcoin, the social risk has barely done anything. So it's almost, what it tells me is, like, it takes such a huge pump just to keep the social risk at where it is. So I think, my best guess is that, and again, I certainly could be wrong, but my best guess is that there's going to be at least one more scare, and I think it's going to occur in the third quarter. Is what I would guess. I think the final scare will be in Q3. I mean, it could come in Q4, but we also have to remember a couple other things, though. we have the halving coming up in 2024, and that always creates a lot of hype. And it's also going to be in early 2024. In our first cycle, the halving was in November, and the second one, it was in July, and then the third one, it was in May, and this one's going to come even sooner. So, we barely have even a little over a year before we really get into sort of the next halving cycle. So I think we're going to have one more scare, and I think it's going to really test everyone. And that's how the crypto market is. I mean, there usually is one secondary scare after the first one. And my guess again is that it's going to happen in the third quarter of this year. And I mean, it might be a slow bleed. It could be people just the price is going sideways. It could be like a double bottom, or it could be a lower low, right? I mean, that would certainly shake up the market if it's a lower low. And the only reason I say that a lower low could come is if the Fed, if the Fed pushes us into a hard landing, which again, Bitcoin has not experienced market conditions like the one it's currently experiencing. And I'm of the opinion too that, and again, if I'm just rambling, feel free to cut me off. But I'm of the opinion too that that this was only going to make Bitcoin stronger, because one of the things that the critics of Bitcoin have said for the last decade is, well, Bitcoin's never experienced a recession. Well, if we get one, that's no longer a point against Bitcoin. It's like, well, it did experience one, and it still rebounded. And so I'm sort of looking forward to the idea of seeing Bitcoin come through that and come out stronger on the other side, and I think it'll do quite well. So if you think about where we are in terms of the general business cycle, the Fed's raising rates, they're rolling off assets from the balance sheet. Historically, stocks do not bottom until the Fed pivots, and normally it occurs after the Fed pivots. And I think that crypto will bottom before stocks is my guess. I mean, we've actually seen that many times. If you look at 2018, if you look even in June, I think crypto could easily bottom a couple of months before the stock market. And so my guess is that we're going to have one more scare, and it's going to be really hard. And then after we get through that, and after we get into 2024, it'll be time for another phase of economic expansion. I think the Fed's going to be forced to pivot, because I don't think they're going to be able to keep rates at like 5.5% forever, which is what they're likely going to get to here in the next couple of months. And then they're going to have to turn the money printer back on, sometime in 2024. And I think you can kind of see things aligning like they always do, right? I mean, you have your bear market year. You have of 2014, 2018, and 2022, which is essentially just down only. And then you get your recovery years of 2015, 2019, and 2023. 2015 was a double bottom. 2019 was a higher low. Maybe 2023 is a lower low. Maybe it's a double bottom. I don't know. But again, my expectation is that we're going to have one more scare, and then we should be good to go.
I wanted to ask you real quick, Ben, back to your models. So like how do you use them to decide like when to buy, in the sense of like, if two of your three models hit, do you go, okay, now it's time to buy? Or do you weigh all of them equally? And then also, what would you say is your quote unquote most important one?
Yeah, so I mean, I really like that we recently built one that's like a total risk indicator, which just includes everything. It includes 5 or 6 different price risk levels, 5 or 6 like on-chain risk levels, and then 5 social risk levels, and they're just all weighted the same. So I mean, I think just using that and sort of tuning everything else out and saying, I mean, as difficult as things might be, especially in June, and especially in November, it doesn't, and just because you have sort of like an outlook that, okay, well, yeah, it could go lower, it doesn't mean you shouldn't be picking some up, right? And it's also the same way in a bull market, right? You sort of analyze, well, could it go higher? And the general expectation is that it will go higher. It doesn't mean you shouldn't sell into it. So I think that I just use the risk levels, and essentially what I do is I just set limit orders at the risk levels. So I'll just look at it and say, all right, well, the 0.2 risk level is at such and such price. I'll put a limit order there. And then I'll say, all right, well, the 0.1 risk level is at this other price. And I'll put a limit order that's maybe twice as large as the other one, just because it's at a lower risk level. And I mean, actually, I distribute them in risk level, in risk increments of 0.025 risk is what I do. And so that's worked out relatively well over long periods of time. It's not always obvious in the short term that it's going to work out, especially if the price trend's lower. But that tends to work out. And I should be clear. I mean, this is, I've only in over a year, and basically a year now, the only thing I've really bought is Bitcoin. I haven't bought anything else. I just, I'm of the opinion, and I know your podcast is called Because Bitcoin, but I'm just of the opinion that Bitcoin is going to take over for a while, and the dominance of it's going to go up a lot, and that's the most important thing is to try to stick to the blue chips during hard times, and then when you get looser monetary conditions, it's a little bit easier to expand.
That's great stuff, Ben. And yeah, the mantra and the underpinning of our brand Because Bitcoin is trading markets to increase our Bitcoin denominated net worth, so that ultimately when the next bull run comes back and commences, we make it pretty easy on ourselves to just ride that wave while Bitcoin hopefully leads off the bottom, and then we can hit some altcoin rotations and things like that. I have a question for you in regards to the total crypto market cap. So today we're sitting around a $1 trillion valuation with an all-time high of roughly 3. I will ask you, as you say, to just dubiously speculate, and I promise we won't hold you to it. We're just having some fun. But if you would, what is your expectation for the next cycle in regards to where, first, where we could bottom, and when does that accumulation phase of a lifetime start? And potentially, again, dubiously speculating just for fun, what would be a realistic target to the upside for the total crypto market cap? Because obviously, what's a few trillion amongst friends at the end of the day?
That's a good question. So I think so my worst case scenario for total market is the 400 to 500 billion range, and I think we already went to like 700 or 800. I think right now like we're right around 1 trillion or so. So the worst case scenario I could see is around the 400 to 500 billion range. But I will say this: if total goes to the 400 to 500 billion, I think a larger part of that is going to come from the altcoin market, and maybe even from the stablecoin market. I mean, we have to remember that stablecoins make up a significant part of the market cap, and there have been some regulations recently and stuff like that that could hinder the stablecoin market. So there are reasons that the total market cap could go down, for reasons other than Bitcoin going down. I mean, Ethereum has a very high market cap, and if you cut it in half, which I am actually of the opinion will happen before the next bull run begins, that would go a long way in getting you to those levels. So I think the worst case scenario for total market is the $400 to $500 billion range. This is essentially at the sort of the lower bound on that. Like I do a series called Bitcoin: The Beauty of Mathematics every month. And that's really at the lower bound, and maybe even slightly lower than it. So I would say around 500 billion is probably worst case scenario for the total market cap. And yeah, if it happens, it could be sort of like a fleeting moment where it happens on a single day, and then we're back up again and off to the races. As far as the accumulation phase of a lifetime, these are hard to sort of. It's hard to say because you could have, a lot of people would have made similar videos back in June, and they would have been right for 5 months, right, before we put in new lows. And I don't know that you can say they were necessarily wrong. I mean, the price is higher now than it was back then, even though we went to new lows. Of course, you could have said the same thing in November, right? You could have called it the accumulation phase of lifetime then, and you still would have been doing quite well. I think, as I've said before, the accumulation phase of a lifetime videos that I did last cycle, it's not always about timing the bottom exactly. It's more so about once we think the worst is over, and then we're slowly starting an uptrend, right? Like we're slowly in that uptrend. So like last cycle when I did it for Ethereum, I think Ethereum was like, $180 or something like that. And so that was off of its low, but it felt like the market had bottomed, right? I mean, a lot of these altcoins had gone down 95% or more, and we were slowly trending higher. So I mean, I think you can easily make the case that there's been plenty of great accumulation opportunities for Bitcoin already. As far as an accumulation phase of a lifetime, so I think the lifetime part, to me, what it signifies is that the worst is behind us, and that there's not a real good case for the bears anymore. Right? There's no solid case for the bears. And the reason I make those videos last cycle was just because I felt the case for the bulls was just so overwhelming. Like, it was like, how can no one else see that everything is so undervalued? Like, we have Bitcoin at, like, $4,000. You have Ethereum at like $100, and so on and so forth. So it seemed obvious that we were heading much higher at the time, and there's certainly a lot of things that were aligning to sort of suggest that was going to be the case. Now, while you could argue that there's been great opportunities to DCA Bitcoin at 15K and at 17K, and even at 20K, 21K, et cetera, while there's great opportunities in the long run, I'm sure. I mean, I think 2 years from now, it's going to be comical, right? That we're squabbling over whether the bottom's 15 or 17 or 13, right? It's not going to matter. Just like in 2018, it doesn't matter anymore if the bottom had been 5K or 3K or 2K. It doesn't matter in the long run. So, but I can tell you, when you can look for those videos from me, it would probably be again. I would say probably later this year, because as we get closer to a Fed pivot, as we get closer to the next halving, that's when it becomes more obvious, right? But it's hard to make that video right now, because to do so would be fighting the Fed, and I'm not one to want to fight the Fed. So I have my position, but until you can sort of see the light at the end of the tunnel for this rate hiking cycle, until that comes, then I think you have to still remain cautious on calling it something like that. It doesn't mean you have to go lower, but it just means there's going to remain some of these macro headwinds until some of these things are resolved. Like, think about the inversion of the yield curve. Look at things like the unemployment rate that are at secular lows. But normally when that happens, it precedes a material rise in the unemployment rate. And we already see the layoffs occurring across various industries. So I just think we have to get through probably the third quarter of this year, which is what I think is going to be sort of the final scare before we can really get into the next phase of expansion. You might say, well, even by Q3, it's not like the economy is going to be trending back up again, right? It's not like all these companies are going to be hiring people again like crazy and stuff. But you have to remember one thing, and that's market's bottom before the economy gets to its worst point. So I think the economy is going to get to its worst point like late this year, early next year. But I think that the market will sort of definitively find the bottom, whether it's sort of like a double bottom, a higher low, or a lower low. I think that'll occur by Q3, and I would say Q4 at the latest. And as far as the last question for total market cap, the upside, it's a tough question, because and it's a tough question because one of the issues is that you want to put out all these like price predictions and in sort of the recovery years, because it's sort of a sign of hope, right? We all hope that it can go back to these levels, and I think we all think that they will. The danger to them is that you put out a prediction like that now. So like imagine I say that I think total is going to go to 5 trillion, right, by 2025. Let's just say I say that. The issue is, if we go to 4.5 trillion, then everyone who heard that prediction today might be very, very happy, because it's like, all right, well, it didn't go quite to 5 trillion, but it got close. But the people that YOLO into the cryptoverse in 2025 at 4.5 trillion, they might get pissed off if 4.5 trillion ends up being the top, right? Rather than going up to 5 trillion. So it becomes a very dangerous thing. I think the main risk is can inflation go down in a material way where the Fed just gets out of the way? If that happens, then I think we're going to, I think we could go beyond three. I think we could put in a new high, right? Beyond 3 trillion. My thinking is that we will eventually get to 10 trillion, but I am starting to think that it might take two more cycles to get to 10 trillion. So that's sort of my ultimate target, but I'm not sure if we can make it there in only one more cycle. But I think in 2 more cycles, 10 trillion is perfectly reasonable. So next cycle, I think is going to throw us a curveball to some degree. If you think like this, every cycle has to throw us a curveball, right? Like this cycle, it was the double top. The cycle before, it was basically just like a slow, methodical move up. The cycle before that was a double top, but the second top, or it was a double peak, but the second peak was much higher than the first. So every single cycle has been so different than the one that came before it, and that's how it has to be, because otherwise, we can't. It's a zero sum game, right? Like we can't just all buy the bottom and all sell the top. There's got to be someone that doesn't. So I think the next cycle is going to throw us for a loop, and it could involve something um, and one potential outcome that I think some investors should actually consider a bit more seriously than maybe they are is a potential cycle where Bitcoin could significantly outperform for a longer period of time. And I think the biggest risk there is just altcoin regulation, and you've already seen things. You've already seen the SEC start to really go after some of the cryptocurrency market, and I think what that's going to do is it's going to drive more of those flows back into Bitcoin. Um, I guess if you think back to 2019, Bitcoin had a pretty impressive bull run where it went up 4x. And if you had assumed that putting money into the altcoin market after Bitcoin had peaked, if you had assumed that the altcoins would have rallied after that, you would have gotten wrecked, right? Because what happened? The market just slowly bled for the next 9 months. So there is that risk, I think, as well, as just because it historically happens like that doesn't mean it's going to happen forever. And I think one of the main risks is there going to be regulation for the altcoin market? And I think even the fear of something like that is likely going to drive more money to Bitcoin and maybe Ethereum as well, if we can get sort of clarity on it's not a security.
Yeah, thank you, Ben. That's great stuff. We always appreciate all of your insights. It actually segues me into my next question for you. Obviously, each cycle is a little bit different. A couple noteworthy things, in my opinion, here for the last cycle is that for the first time, as we've entered the bear market and we're potentially approaching a cycle low, we've actually breached a previous cycle's all-time high, which hasn't happened before. And we've spent more time now below the 200-week moving average than really ever before. I know that there was a capitulation in a previous cycle where we did technically wick below, but we're coming back and retesting the underside of it now. So a couple noteworthy things, amongst others, like the double top that you spoke of, that are significantly and materially different than previous cycles. So my next question is, last cycle, you were a proponent of lengthening cycles with diminished volatility, both to the upside and to the downside. After the previous cycle, you can assume the top was either 64 or 69. How, if at all, has your outlook on crypto cycles changed? And Ben, you are on mute. Just a heads up if you didn't know that.
Sorry, yeah, good. Thanks for catching me. That's a good question, and I think it's always good to sort of reflect on those things. And so yeah, I went into the last cycle thinking we would see diminishing returns and lengthening cycles, and we only got one of those. We got diminishing returns, but we did not get a lengthened cycle. And it could be just simply because how quickly the macro changed is could have cut it off sooner than it otherwise would have. But if I'm being honest, right, that seems like a desperate attempt to sort of explain it away. I think at the end of the day, it was wrong, and part of it was right, part of it was wrong. So you got the diminishing returns. You did not see the cycle go on for longer. But I will be clear, though, it's trading cycle theory is not something I think people should do. I think that sticking to the risk levels no matter what is what I did, and that's really why I sold into the first peak. The first peak came probably a year before I thought it was going to come, but it still doesn't mean you don't sell into it, right? You never let a good bubble go to waste. We don't know when these bubbles are going to occur. We simply do not know, and there is some evidence that they are becoming, increasingly irregular, right? Like if you look at, there was sort of like a rally in 2017, there was a rally in 2019, and there was a rally in late 2020 and early 2021. And I mean, truth be told, most indicators suggest that April was the top. Like basically everything but the price if you just looked at indicators of the last cycle and use those to sort of guide what price or what you thought happened with price, you would look at every single indicator and think that the peak occurred in April, I think. So from that sense, you could argue that the next rally from the prior peak only took 3 years, and if that were to play out this time as well, 3 years from, say, April of 2021, that would put you in April of 2024, which is not really that far away when you think about it. But I do think there's becoming, increasingly irregular moves in the cryptoverse, right? Like they're not exactly on the same path. Now, you could argue that the bottoms have been more predictable than the tops in terms of their timing, but I would say that going into the next cycle, my opinion is likely just going to be like, if it's not broke, don't fix it. I mean, typically you have your halving year. Typically the halving year, you see pretty good returns for Bitcoin. Typically the following year, you see pretty good returns for Bitcoin. And if that happens, and we see just the same thing that we've always seen, then how do you not go into 2026 bearish? How do you not? I think one of the things you'd have to be on the lookout for is, during the next phase of expansion, one of the things that could really temper the final return and could send us back into a bear market would be something like inflation returning. You look at the 70s and the 40s. Look at the 70s. I mean, we had a decade of persistent inflation, and it just kept coming back because every time we went back to QE, inflation just came back. So I think that's the risk. I would say what I'm going to do this time is be more cognizant of sort of what the macro risks are, rather than completely ignoring them. The reason this last cycle was difficult was because you had the first peak, which essentially hit every indicator. Every indicator was saying, "Hey, it's time to sell," right? And so I did, and it was very difficult selling back then. I mean, I sold a lot of Bitcoin at like 58K, and then I watched it go to 61K, and then I watched it go to 64K, and I watched crypto Twitter call for 300K, and I kept thinking to myself, man, I'm the schmuck. Like I sold like 87% of my Bitcoin before it even got to 60K. And then I'm sitting here watching it. I'm thinking like, well, now I'm just going to get left behind and it's going to go up. So I was really hoping for that summer pullback, and we got it. And I was able to sort of reaccumulate some of what, at least a portion of what I'd previously sold. I mean, I didn't buy in with everything just because I didn't know. I mean, I didn't know how long, how much longer we had. I was hoping we had a lot longer, but I went into it thinking that the cycle would go on and that we would see new highs, and we did. And then everything came crashing back down. So I think this time I'm going to go into it a bit more flexible. I'm not going to sort of say that it has to peak at a very specific time. Like it could be, it's probably more so a function of just the risk, right? I mean, like, I don't know when Bitcoin's going to go to the highest risk level, but if and when it does, that's when I just go risk off, right? And in hindsight, I think the right thing to do last cycle, as difficult as it would have been, I think the right thing to do for my own circumstance would have just been to sell the first peak and then just turn macro bearish after the first peak. I think would have been a better thing to do than to sort of bank on the secondary peak happening, even though the secondary peak did happen. And the reason it happened were for different reasons that I thought. I think it just would have been easier to just sort of turn macro bearish after the first visit to the highest risk band. So what I'm going to do this cycle is not really put a time frame exactly on when it has to occur, but it's just whenever it does occur is when I get out, and that's where I just turn macro bearish.
Mr. Cowen, I wanted to touch up on a few things. You had mentioned something that the previous two bear markets had bottomed um, about a year after their peak. And one thing that I find very interesting is that we seem to always top 18 months after the halving and 18 months before. And I found that to be a pretty interesting, good data point. And I know you had mentioned something along the lines of a social risk. And touching upon that, I remember after the Terra collapse during that event, you ran a live stream for about 5 hours, which was absolutely phenomenal. So, as far as things like social sentiment, right? Do you think 2022 was a lot more harsher than 2018, right? And if we look at other metrics, like as far as drawdown from peak to the low that we hit in November, the bear market of 2022 was actually more forgiving for majors than the previous bear market, where Bitcoin had gone down something like 84% and Ethereum had gone down 96%. So I'd love to know sort of like your gauge on things like social sentiment comparing the previous two bear market cycles. And I'll wait for my follow-up question after
Sure.
this one.
So I don't actually have. So the social risk only really exists for this cycle and the one before it. We don't really have the social risk for any cycles before that because, crypto Twitter just didn't really exist back in 2015. Not in the same way that you could really measure something and think that it's gonna be that insightful. But yeah, I mean, one main difference that I'm seeing between 2018 and 2022 is that in 2018 people threw in the towel a lot sooner. They gave up a lot quicker. And this time, people aren't giving up. Like, I mean, it might seem like people have, but when I can put out a video and within 12 hours still get like 60,000 views, to me that tells me people still haven't given up. Whereas in 2018, I mean, I don't really remember crypto Twitter collectively calling the bottom. I mean, there were a few people, but not very many. And this time, it just seems like everyone's just ready to go back up, like go back up to new all-time highs immediately. And so that's why I think that we need one more scare, is because there I think there's just too much. I think people are getting a little ahead of themselves in thinking that we're immediately going to go back to new highs, especially when we're seeing sort of the contraction of the money supply. I mean, again, a lot of as boring as it is, a lot of the reasons these asset prices go up is just because the money supply goes up. If you look at Bitcoin divided by M1, it's gone sideways since like 2017. you know, so I think that I think people threw in the towel quicker in 2018, but I think 2022 was probably, for me, 2022 was more mentally taxing than 2018. One of the reasons 2022 was more mentally taxing for me than 2018 was because I had a public following, and I was very vocal back in the summer that we needed to go down by the end of the year, and there were times where I was like, well, maybe I'm wrong, maybe it doesn't or something. I would sort of think that to myself, like, how is it possible that we've already bottomed by June? Like, that doesn't really make a whole lot of sense to me. So 2022 was harder for me than 2018. And I think one of the reasons 2022, you could also see it as being harder for a couple of reasons, is we saw the collapse of so many different platforms that I think affected many more people, like a lot more people than were affected in 2018. 2018 was still bad. I mean, we still had a lot of exchanges were insolvent. There were a lot of scams that were exposed. A lot of people lost a lot of money back then, but it didn't have the same reach as it did in 2022. You didn't see, like, as something as big as FTX collapse back in 2018 and affect as many people. So to some degree, to me, it feels like 2018. People just threw in the towel a lot sooner. I think one of the differences between 2018 and 2022 was that in 2018 we still had, crypto had still not really gone mainstream. You didn't have like every celebrity creating an NFT. um, and so there wasn't this sort of mainstream aspect to it. And I think people threw in the towel a lot sooner. So while price action continued to go down and we had like a huge capitulation at the end of 2018, a lot of people had already left. Whereas this time, some people have left, but there still are a lot of people. And I mean, one reason for that is just from one cycle to another, you're going to see a growing base, right? Like like the the number of people involved in crypto during this year, during sort of the pre-halving year, is more than it would have been in the last pre-halving year of 2019. And that's sort of just the adoption cycle. So you could argue there's some elements of that, but um, from a price based perspective, 2018 was a lot worse than what we've seen so far. But this one has hit me harder just because I have a following, and I feel like I have a responsibility to constantly remind people of what is the downside risk, while also trying to show them, hey, like while there is the downside risk, like we're still likely going to explode again after the Fed pivots, right? Like it's just a matter of time before we get back to that point. So that's why it's been more mentally taxing on me than 2018 was. I would have to say.
So
I had a question real quick for Ben. I was gonna say, I know you're more of a technical trader, but what are some, like, I just like to pick people's brains about this. Like, what are some narratives you think for BTC that could be for the next cycle?
I mean, I think there's a lot of narratives.
Yeah.
So one narrative I think is just further institutional adoption. I mean that's sort of like the easy answer, but it's true. I mean, throughout the entire bear market, we've seen so many more institutions get on board with Bitcoin, and most people have ignored it, right? And the reason why, well, because when you're in a bear market, you ignore the good news. Just like when you're in a bull market, you ignore the bad news. So I think that's going to be part of it. I think that another aspect of Bitcoin going up again will be easy things, just like, hey, there's more money in the system, and when you go back to QE, you're just going to see that. I think you're going to see that come back, because the thing is Bitcoin was at 69K, in November of 2021. And at some point, when we get back to QE again, and the Fed turns the money printer on, there's going to be people sitting around like, hey, why is Bitcoin at 15K when a couple of years ago people were willing to pay $70,000 for this thing? And I think just silly things like increased liquidity. You could argue that Bitcoin to some degree is a measure of excess liquidity. So I think that will be a good narrative. Obviously, the halving is always a good narrative. I think another narrative, honestly, is just I think there's going to be a lot of people that are a lot of funds and whatnot that are going to see Bitcoin as a safer play. Honestly, I mean, you look at what's happening with the SEC again. I mean, like, I think this is going to drive more money to Bitcoin. Is my guess. The other thing is, I think that a higher interest rate environment, which is what we're in and what we're probably going to be in for a while, it's going to force money to be pickier with where it goes. Okay, so if interest rates are at 5%, access to cheap capital isn't the same as it was in prior cycles. So I don't think you're going to see as many. I don't think you would see as many people throwing money into the altcoin market if interest rates stay high. Now, if interest rates come back down, I mean, yeah, we'll just go full degen again, and the altcoins will surge once again. But that's always a risk that you take. Is there's going to be regulations, I think, that are going to hit the altcoin market harder than they're going to hit Bitcoin. And that's why I think, like you guys said before, I fully agree with you. I think now is the time to just sort of hunker down in Bitcoin for a while, have some cash on hand in case we get that second scare later this year, and then just wait And and then the altcoin market, once there's more clarity on regulations, then it'll be a little bit more clear. But so those are some narratives. I do think there's also just an element of more and more people getting into Bitcoin, growing adoption. Sometimes it feels like everyone already is in it. And then I sort of talk to people in my neighborhood and I'm like the only person that's in crypto. So there's some element there of like, yeah, it sort of feels like we've reached everyone, but then again, doesn't really, right? I mean, I think sometimes the reason it feels we've reached everyone is because we surround ourselves with like-minded people. We spend our days on crypto Twitter or crypto YouTube, and we just talk to the same people over and over again. But the majority of the people in the world still don't really care about this stuff. So that's something. I also think that the just simple things like inflation could just these narratives around inflation and people watching their wealth just sort of evaporate because inflation is at 6% year over year. I mean, honestly, yeah, Bitcoin hasn't responded the best since inflation peaked, but I think that was more of an artifact of not inflation itself, but knowing the response by the Federal Reserve, like knowing that the Fed was going to have to go into a rate hiking cycle and knowing that they were going to turn hawkish is, I believe, more so what sent Bitcoin down. But I mean, you look around and people are going to start questioning, like, why can't I go to the grocery store and get what I used to be able to get with $100? Now it costs $200 for the same stuff. And you think more. I think more and more people are going to start thinking about sort of the debasement of fiat currencies and trying to find a safe haven. And what better safe haven than, I mean, as far as I'm concerned, right? What better safe haven than Bitcoin, especially when you're in a period of QE and when you're just after the halving. So I think that'll probably be a narrative to sort of ride as well. The truth is no one really knows. If you had asked me last cycle, it's not like I would have said, "Oh, well, I think MicroStrategy is going to buy billions of dollars worth of Bitcoin," right? Like I had no idea that was going to happen, and I also had no idea that the NFT market was going to take off in the way that it did. Like back in 2019, I didn't think like, oh, we're going to have millions of people flood crypto because they're all going to be buying NFTs. Like that was not a thing that most people are talking about. So the truth, in reality, the truth is, no one. I mean, the next narrative, it might not pop up until another year from now, and it could be something that none of us have even thought about. Um, and that's what Bitcoin does every single cycle. I mean, from one cycle to another, it's the narrative is constantly changing. Whether it's store value, digital gold, whether it's peer-to-peer currency, whether it's a hedge against inflation, right? We're going to find another narrative, and we're going to follow along with it for a while, and it'll run its course. And the next bull market will be slightly higher than we were before, and it'll just continue its adoption cycle. So, I mean, I've listed off several different things, but at the end of the day, the next narrative could easily be something that none of us are even considering at this point.
Ladies and gentlemen, I want to remind you we're here today joined by Ben Cowen. My name is Wabi. I host these spaces almost every day. So if you're enjoying this crypto-specific content from us, feel free to follow us here at Because Bitcoin and turn on bell notifications so that you can be made aware of when Crypto World Radio is going live here. The time is always adjusted and working around flexibility with our guests, such as Ben Cowen. And thank you for tuning in and joining us for a conversation with Ben. We're getting to know Ben and sort of his outlook on the markets. And also, we got to know how he came into the Cryptoverse. And Ben, so from the looks of it, you know, we're still in the sandbox and we should postpone the Forbes interview for at least another 2 years. Am I right on that, sir?
Yeah, I don't think it's gonna take 2 years for the market to go back up. And I know a lot of people are probably looking at it like, wait, what is he talking about? Like Bitcoin's up 60%, like it's already going up. But yeah, I think that sometime by mid next year, I think the sentiment's going to be a lot better, right? Like I think you're just going to have a lot of this bad stuff behind us, and we should just be trending up more and slowly going higher. But yeah, I mean, maybe the Forbes interviews are good for 2025.
Exactly. Ladies and gentlemen, if you want to come up and ask Ben any questions, we'll be taking questions now. Feel free to give your statements or anything like that. There should be a button in the bottom left corner, request to speak, and I'll bring you right up. And once again, we're here joined by Ben Cowen from Into the Cryptoverse. And just as a reminder, if you're new here, my name is Wabi. I host these pretty much almost every day with my co-host, Feel Payne, who just joined the team. And this space will be uploaded onto our YouTube channel 5 to 10 minutes after it's concluded. But today's more of a mega space. We do have Premise and also Snorlax here with us, joining us up on the panel. So today's a pretty special space for over us here at Because Bitcoin. So without further ado, we're gonna bring up some individuals one by one for questions for Mr. Cowan here. So first one we're gonna bring up is Luke McKeek. So I'll bring you up, sir. Are you guys seeing Luke as a speaker? It says connecting on my end.
Unfortunately, I am not. I see him as a listener. Luke and I are mutuals. I don't see him as a speaker, though.
Okay. Um, I'll bring up the next person, Mr. Brad Mills. Mr. Mills, go ahead with your question or statement for Mr. Cowan.
All right. Hey, how's it going, guys? Ben, I first became aware of you when you did the Sailor interview, and that was a really good podcast. And I've been trying to get a hold of you since because I saw you were trying to have a debate with him about Ethereum and DeFi, and he just kept deflecting, and he didn't want to talk about it really. But I'd love to have a conversation with you sometime on my podcast or yours or whatever about that because I think it's a really interesting topic. And it was a great interview, but I think it needs, it would be great to have a longer conversation, like a real debate about Bitcoin versus crypto, DeFi, Web3, all that stuff.
Okay, I mean, I don't know. I don't know what side are you on. I mean, I'm sort of on the side right now that all that stuff is bleeding back to Bitcoin. Are you on? I guess you're on the other side of it.
I can't hear him. Can you guys hear him? I don't know.
No, I don't hear him.
Yeah, I think Spaces is bugging, but I brought up two other individuals. Mayor Ed Dantes from the corporation, and also Nicholas. Mayor, go ahead, brother.
Yeah, hello, Wabi. Hello, Ben. Really enjoy the YouTube channel, and it's great to be able to ask you a couple questions. I have two questions for Ben. Number one, do you think after 2022, with all the FTX implosion, do you think we're moving past that? And I think nothing better spells the narrative of self-custody and being able to self-custody your Bitcoin. Do you think we're past that? And do you think the narrative from the media, like the way they tried to spin it, like how do you think that's going to affect us going forward?
I think the contagion stuff is mostly behind us. I don't think that. I mean, I think back to how big FTX was, and it only got us $2,000 below the prior low. So I'm not really of the opinion that the contagion events of that are going to really affect Bitcoin in a material way. I do think that self custody is going to be even more important in future, in the next cycle. And I, as me as being a sort of a, someone who has a larger following, I probably it's probably something I should talk more about, and kind of recommend that people get on board with this self custody stuff, because I mean I know sort of the there's like this block for a lot of people that it's hard to want to figure that out. But as we've seen time and time again, right, it's fully worth figuring out how to self custody your Bitcoin, because if you don't, it's not your Bitcoin, and you quickly find that out, whether it was through FTX, BlockFi, Celsius, Voyager. I mean, there's so many different ways that you can point to. If you don't own the keys, then you don't own the crypto. So I do think you're right. I mean, self custody is going to be very important for the next cycle. But I would say I do think that the contagion events from that have mostly run their course. I think the risks for crypto right now have nothing to do necessarily. The risk for Bitcoin is not anything crypto specific right now. I think it's more, the main risk is more of a of an overall economy risk and access to liquidity risk rather than a crypto specific risk.
Okay, thanks. And one more question.
Last question will be from Nicholas, and then we'll begin to wrap up to be respectful of Mr. Cowen's time. So, Nicholas, go ahead, man.
Thanks for having me, Wabi. Love all your spaces. This one's been great. Thanks, Ben, for joining the space. I'm actually coming from you as a ITC premium member as well. So I kind of already know where you stand, and you had touched upon it with going forward to the next year or two. One of the narratives might be that Bitcoin's seen as a more of a safe haven asset for some of these larger funds. Just curious to get your opinion on, if these funds start allocating to Bitcoin, do you still think the crypto cycle would kind of follow like Bitcoin sort of leads off the bottom, kind of goes parabolic? I know you said it could go a little bit longer than maybe it has in previous cycles. But
sorry, could you repeat that? I got a call right when you asked that question, and you cut out for a second.
I'm sorry. Yeah, so I'm a ITC premium member, but so I kind of know where you stand with the regulatory clarity type of thing, where funds could start seeing, they could start allocating to Bitcoin a little bit more, see that as a safe haven asset over the next year or two. Just curious to get your opinion on, if they start to do that, large amounts of money going into Bitcoin, do you still think that the crypto cycle would sort of follow as it has in the past, where, I know you mentioned Bitcoin, the dominance might stay there a little bit longer than it has in previous cycles, but do you still think that eventually that rotation would happen where you sort of, you see the ETH tsunami and then you see the altcoins pop type of thing? Or I guess, how would you speculate that the cycle would go if it were to follow that sort of, if funds were more regulatory conscious, I guess?
Yeah, I mean, my base case is that you'll just see the same stuff play out. I think it's worth talking about the risk of it not happening, but my base case is that you'll see the same thing. So I think what you're likely going to see, and I've had this opinion forever, as you know, I think you're likely going to see the dominance of Bitcoin make a move to sort of the 50% level relatively soon, like within the next few months, and then I ultimately see the dominance peaking probably around 60% or so, but not in not in like a recovery year. Like, I think you'll see the dominance peak at around 60% in sort of the early stages, or maybe even the middle stages of a future bull market. And I know that sounds like really high for a lot of people, but I mean, you have to remember, the first cycle we were at like 80, 90, or 2 cycles ago it was like 80 or 85%. And then last cycle it went all the way up to 70%. It's perfectly reasonable for it to go up to 60. And we've seen just how quickly the dominance can move from 39% back to 44%. So my speculation, and what I'd like to see, just because it's, I planned for this last cycle and it happened in early 2021, is to see Bitcoin Bitcoin to go up eventually, right? I mean, I think we're going to spend the next year crabbing at best. But, to really see Bitcoin go up in a material way, 2024, 2025, I think you're going to see the dominance get near 60%. I mean, somewhere around there, right? Plus or minus a couple percent, but around 60% level. And then at that point is when you can likely get more so bullish on the altcoin market. And I want to be clear about something. The reason why you track Bitcoin dominance is because altcoins would have bottomed on their USD pairs well before Bitcoin is in a parabolic rally, right? But that's not the point, right? It's all about your opportunity cost. if Bitcoin outperformed that altcoin by 5x or 10x, during that Bitcoin dominance rally, you can always convert your Bitcoin, a small amount of it, to altcoins. I still would recommend majority in Bitcoin, more or less at all times, because altcoins, you don't really know. Right? You really don't know what's going to happen to them. I mean, look what happened to Luna. It went from a really high market cap to zero in about 48 hours. So those are huge risks. But I do think you're going to see the dominance go up a bit more during this year, just sort of as a recovery year. And I think you're going to see it continue higher as Bitcoin takes over once again. Remember, every time essentially you see Bitcoin lead the bull market. Altcoins don't lead the bull market. They just sort of hitch hitch a ride with Bitcoin, right? A rising tide lifts all boats. Bitcoin's going up, it's gonna drag the altcoin market with it, assuming there's not regulations in place to keep people from buying them. So if the SEC has not really cracked down on the altcoin market by 2024, 2025, because we know these things go at like a snail's pace sometimes. If they haven't cracked down on it, then I would assume it's going to play out the same way. Like, you'll see Bitcoin rally, and then you'll see Ethereum rally, and so really the way the cycle works, and we covered it really close to last cycle, is you see everything bottom. Some altcoins will spend a few months making some gains on Bitcoin, and Bitcoin goes through a parabolic rally. After Bitcoin's parabolic rally, the altcoin market goes up a lot. And when I say the altcoin market, I mean everything besides Bitcoin and Ethereum. Of course, Ethereum technically is not coin, but just for the sake of calling it, calling the altcoin market, I'm referring to everything besides Bitcoin and Ethereum. And the mistake a lot of people make, and we saw this happen in 2021 as well, is that Ethereum, it takes a lot more time to build up that momentum. And then once the momentum is finally getting close to sort of exploding, everyone wants to convert their ETH to altcoins because the altcoins are popping, right? So after Bitcoin goes parabolic, the altcoins normally pop a lot more before Ethereum does. And so people will trade their ETH for altcoins just before you see that ETH tsunami where it goes up 2x in 2 weeks. You saw it occur in 2017, 700 to 1400 in 2 weeks. You saw it occur in 2021, right? I mean, it went from like 2,000 to 4,000, 2,200 to 4,400 or so within the span of about 2 weeks. And this was already after it was up 3x that year, and already after it was up, 20x from the bottom or something. So this is what I'm sort of planning on, is that you're going to see the same rotation as always. But I think you also have to be flexible and recognizing that the rotation might not happen if people literally can't buy the altcoins. Like, if the SEC comes out and says, all these altcoins are securities, and then every exchange in the United States just no longer lists them, which, again, I don't know how much of a risk it is, but there is a risk that happens, then you shouldn't assume that the altcoin market's going to pop in the same way. Like, if people in the United States literally can't buy them in a legal way, then that's where you get into the idea, well, maybe it's going to be, maybe it's going to play out in a different manner. But I would assume until you see something like that, then I'm going to assume it's just going to play out the same way that it always does, and not assume this time is different.
Mr. Cowen, I wanted to thank you for taking the time out of your day to join us here on our Because Bitcoin Twitter Spaces. I know we've gone over the hour mark, so I want to be respectful of your time. And you guys want to be sure to check out a replay of our space after this one gets concluded, given that we're going to roll over straight to market check. So, Mr. Cowen, thank you so much. God bless you. It's been truly an honor to host you on my platform. Been looking forward to this for many months, and truly something that I can mark off of my checklist, as you say, right? And hopefully we can all get out of the sandbox, get out of the woods, put on our rally caps, and schedule that Forbes interview, man. Truly love your content, man. And thank you so much. Thank you again. Words cannot put it into perspective how happy this experience has made me, brother. Truly,
I'm
man.
happy to come on and answer questions. And I'd be happy to come back if you ever want me to come back. I can always come back and provide any updates that I might have.
I would love that, sir. I would love that, sir. Perhaps maybe like May or April or something like that. Would love to have something like a YouTube collaboration or something. We are doing somewhat of a rebrand on our end for our YouTube channel, so would love to have you, man, and build out some sort of relationship. Would love to be your friend, brother. And if you come to Bitcoin Miami, I would love to get an autograph, dude. like an Into the Cryptoverse rally cap,
Oh yeah.
fully signed and
Ben, are you
everything,
throwing
man.
another party? Are you throwing a party this year?
I don't know yet. I haven't decided if I'm going. You were the one at the party last year?
That's me. That's me with the picture above.
Okay,
So
yeah.
I was gonna try to every year make a. Yeah.
I haven't fully decided yet, and it's not because I don't want to go, but it's just like we recently had another kid, so we have 4 kids. I have 4 kids, and they're all like 6 and under. So that's kind of something that I have to figure out. So I'll let you know. I mean, if you think back to last time, like the party got scheduled like what 2 weeks before it happened. So I'll let you know if I do one, but it's not planned at this point.
Well, congratulations on the newborn. Actually, I have my first kid on the way. My wife is 24 weeks pregnant.
Congratulations!
Yeah, thank you. Really excited.
Cool. Well, thanks for having me on the podcast.
Yeah, thank you so much, Ben. It was a pleasure to talk to you.
You too. All right.
Yep.
Well, I guess I will. I'll just reach out and we can do it again in a few months.
No problem. Yeah, it's going to be uploaded onto our YouTube in a couple of minutes. And ladies and gentlemen, if you're new to the spaces, my name is Wabi. I host these spaces pretty much almost every day now. And if you enjoy this crypto specific content, and if you enjoy AMAs, interviews with individuals that contribute to Web3, like Ben Cowen, feel free to follow us here at Because Bitcoin and turn on bell notifications so you can be made aware of when I do these spaces. And we also run around the clock content Monday through Friday with Market Check and Market Talk. So we're gonna roll on over straight to Premise and also Snorlax straight into Market Check. So gentlemen, welcome, and Ben, thank you again. Have a good rest of your day, brother. If you feel like sticking around, feel free to do so. But I understand that you do have a busy schedule, so thank you so much, and welcome officially to the Because Bitcoin brand. And it's been an honor, truly been an honor.
Thanks again. I will see you next time.
So, Tommy, you're coming to us from the Calebra Group account today. Obviously, feel free. We can just roll it right over into Market Check, our next space, because we're already up here. So, Tommy, if you want to do intros, man, we'll just keep rolling, and would love for the audience to stick around. This next space here is a little bit more like intraday price action, trading concepts. We talk about like news events, stuff that is pretty actionable right now. A little bit more granular than the previous one, which is more big picture. So, Tommy, coming to you from the Calebra Group account. So, Tommy, I'll pass you the mic and you can do the intros.
I just wanted to say real quick, I gotta head out too, but yeah, thanks for having me up again, and you guys should definitely stick around for Market Check. It's a great show, and it was great to speak with you all.
Yeah, see you, Grant. Thanks.
How awesome was that? Yeah, that was awesome. Thank you so much to Ben. I know he's not in here, but that was really great stuff. Pretty unbelievable that we had him on our shows. Honestly, one of those first people that you kind of learn about as you start getting into crypto, which for me was kind of smack dab in the middle of 2021. So, great job. And shout out to Wabi and Grant for getting him on the show. I thought that was a really awesome space, really great discussions that you guys had. But yeah, I guess I'll reintroduce the show, our little super space, our marathon space. The baton has officially been passed. So good morning, everybody. Huge thank you to everybody who showed up today for Market Check and is sticking around on Crypto World Radio. Like Max said, this is typically a show a little bit more centered around trading, markets in an immediately actionable sense. Really just like to have engaging discussions with each other and our guests. But we're going to keep the discussion today largely around crypto. because Ben kind of inspired, I feel like, a lot of discussion and a lot of, ponderings for me, at least, that I definitely want to talk about later on this show. And so, yeah, I guess as for introductions, I'm Snorlax XBT. You can know me as Tommy as well. Coming from the newly named Calebra account, I'm, of course, joined by the CEO of Because Bitcoin Max, as well as Premise. We are here every day, guys. Every weekday, that is. This account, if you guys were used to seeing ARCA partners before, this account has been renamed because of the existence of another fund called ARCA already within crypto. Some of you have probably already heard of it. So, we just decided to make that change. But I'm going to go ahead and give my thoughts really quickly on Bitcoin from a more immediate term standpoint. It's pretty obvious, that Bitcoin has been selling off this week because of equity stocks. I don't think that really needs to be expounded upon too much on the show. But of course, Market Talk with Carter at 4:15 Eastern, we'll touch on that very heavily if that's something that, interests you. But yeah, I told myself I wasn't going to chase shorts in this environment just because just because of how it's punished bears so ruthlessly, run up on the high over and over and over again. I think I've said this last week and this week about how much it reminds me of the highs that we put in last summer with just repeatedly sharp spikes, and they're met with immediate sell volume. So, the price action of Bitcoin ultimately does look pretty heavy. But one thing I will say, right, is that, I've been treating Bitcoin through the lens of multiple ranges. And right now, I would consider this to be kind of our local range lows, right? A level we should probably be bouncing on. Maybe we don't catch a bounce until equities close and we get closer to Asia session. But, truthfully, Asia session, the price action was equally heavy there. I was looking at the price action of Bitcoin, probably about 20 minutes ago, and we have not run a single high since 24.8. It's pretty much just been a bleed. And so typically when you see those slow bleeds into range lows, eventually we're probably going to see a bounce. I think, usually when we break out of value that we've been transacting in for, a week or 2 weeks, I'm assuming that we're not going to break out of, 25K here, guys. Let me just preface by saying that, if we do break above 25 and accept above 25 and a half, I'm going to be a big bull. I'm going to be a big bull, and I'm going to be trading it up to 30K because that would constitute another value break here, right? But I am of the perspective that, we are at high time frame range highs here at the end of the day, right? Like we got rejected by 25K, got our mid range at 21, and we've got our range lows closer to 17 and a half, kind of something like that. Starting to see, some high time frame bear divs at resistance. Which doesn't necessarily mean that we have to sell off here, but, it's not really what you want to see, of course, if you're getting bullish. So, I think for me, I'm kind of, my gut kind of tells me where we're going to run it up maybe one more time. I don't know if that translates to, a new high, but, I do think these slow bleeds typically do, you will end up having a squeeze, or else, we're just going to fall off a cliff right here. And that would be very unfortunate for people sitting on the sidelines like me who are potentially looking to get short. As like I said, I'm not expecting us to break 25K right now. If we do, I will happily play breakout longs. But I think the bigger story is always how, alts get decimated substantially more, or to a substantially higher degree than Bitcoin does. And, it's interesting because the reason I didn't really short a few days ago is because I felt as though crypto had exhibited some secular strength, even in the face of equities, right? I chart Bitcoin versus the NASDAQ all the time. And I believe you have a pretty decent case that Bitcoin has bottomed against the NASDAQ. So, I'm not looking to short Bitcoin as aggressively as I am potentially equities. And if you haven't tuned into the show before, we are short equities. Max and I are, at least dated for June. My position is in profit as of yesterday. So, I'm quite happy with that. If there's a situation where things continue to deteriorate further, I will have at least some exposure to the short side, so I won't be getting FOMO. But I want to get back to alts getting decimated this morning, because I do always think that is such a key story here, especially when, we're talking about how heavily, like, what is the volume made up of here, right? So for Bitcoin, up until about 24K, it was pretty much all spot volume supporting it, which was a very healthy rally. Now we're starting to see more and more OI come on Bitcoin, but we pretty much had, the volume of alt markets throughout really the last few weeks has been entirely open interest, entirely leveraged. So, it's not a surprise that on red days they just get absolutely decimated to a greater degree than you would have seen in even, bull market pullbacks, in my opinion. But it just it begs a very important question, I think, in the composition of this market about what's going to happen when when Bitcoin really pulls back, because I don't think that's really happened yet. I felt the sell was pretty strong. That took us to 21.5, but I don't think it was really that aggressive, personally. I mean, we had probably one or two very strong sell-off candles. But otherwise, I don't think it was really, it wasn't an unwind worthy of the move that we've put in. And so I'm kind of asking here, like, what happens if Bitcoin, trades to 19, 20K? What happens to alt markets then? And I think Ben touched on this a little bit. It might not be a regulation thing, but Bitcoin dominance is definitely in a position to make a very strong move later this year. Hold on, guys. Let me accept this co-host invite. If I cut out, you will know why. Cool. Okay, I think everything is rolling. But yeah, guys, I mean, ultimately, I'm just viewing Bitcoin kind of within, the lens of ranges. I view 23.5 to 25 as another range. And if you're asking about how I would like to trade it, I don't like to diddle in the middle. I say that all the time. I'd rather wait on a break of structure and trust my ability to execute, whether that's, lower or whether that's higher. I think otherwise you're just asking to have that position tested, especially if you're bearishly trying to break down short. But I do think, given the backdrop that equities are kind of providing us right now, that probabilities probably favor looking for shorts versus looking for longs, at least for this week. So, yeah, I mean, I really thought, if we couldn't get a breakout above the value that we were transacting up around 25K, you could get a really pretty nasty unwind, given the effort that, we're starting to put in up here. So I think that effort continues. I still think we're going to bounce, like I said here, because I don't like to short slow bleeds into support. I think that's always such bait. But I do think we are, late stage in this little mini cycle that we're seeing. And GCR had a great point about this as it pertains to alt market rotations, right? When you get these news driven pumps, how does the market respond? If it's met with massive amounts of cynicism and immediate profit taking, you're probably more towards the late cycle of alt market movements. And I think we're seeing that with announcements, right? We saw that with AVAX this morning. They had a bunch of, I will say the AVAX team is kind of one of the most obvious about telegraphing when they have an announcement coming up. So I kind of had a feeling that, this one was being front run. And I knew if we're going to see late cycle behavior here, it's probably more than likely that the AVAX pump from the announcement is going to immediately retrace. And I don't even know that it got a decent pump at all. Honestly, I think it barely even moved. So, I'm not totally surprised to see that happen. I think Clay was another one yesterday that moved extremely strongly to the upside and then, retraced almost just as quickly. So, definitely some late cycle behavior from participants, not necessarily wanting to hold on to too much risk, being careful here. But I think all that needs to be said, still with the caveat that we have not broken out of this little range here, and we are at range lows right now. So it's absolutely possible we have, some sort of spike higher, whatever that may look like. But yeah, I think that's kind of my thoughts for now. I have a lot of questions to ask you guys, kind of based on what Ben was saying, and definitely made me think some thoughts of my own that I thought I was kind of in a camp of my own on. And so it was pretty good. Pretty cool to see, Ben kind of echo some of those thoughts, but I'll get to those in a second. I want to get to Max here, ask his thoughts on the crypto market, specifically Bitcoin. I know you're short, Max. I assume you're having a very green morning on those so far because you got short yesterday, I think early afternoon.
Yeah. Hey, Tommy, that's correct. Obviously, for the past couple weeks, I've been coming up here on these market check spaces with you guys, and it's really kind of been a therapy session for me because I've been expressing all of my concern around having any crypto exposure right now. And it pains me to say that. Obviously, I'm the CEO of a company called Because Bitcoin, and there's probably not many people out there that love and appreciate Bitcoin as much as myself. But given the macroeconomic backdrop, it feels eerie to me, and it doesn't. It unfortunately, Bitcoin trades like a high beta asset. It's going to trade like beta of beta. It's like tech stocks on steroids, and that's just the unfortunate reality. And that's something that comes along with a very young asset class. And as it matures, I imagine that the price action will slowly sort of carve out its own lane and become something entirely different. At least that's my hope, and I think that it will. But for right now, I kind of view Bitcoin in the same way that I would view something like ARK. It's going to be it's owning Bitcoin in this environment is an attempt to outperform something like the S&P 500, given the tight correlation to equities in recent years, and also global liquidity, which is currently on the downturn. So um, I made the decision to dramatically reduce my exposure, basically just shy of like 1,700 on ETH and just shy of 25K, a little bit on like 24.8 ish on Bitcoin, and I plan to fully re-enter the market very very soon. And I didn't want to necessarily bring this up with Ben, a man with his following and his trading style. It's materially different than what I do and really kind of what we do at Because Bitcoin. We're a little bit more active. A lot of us are traders. I think ultimately we have the same objective, which is to increase our Bitcoin denominated holdings so that when the bull market comes back around, we make it easy on ourselves, because I don't care how good of a trader you are. When Bitcoin goes up 500% in a year, you're probably not going to outperform that, just like scalping or day trading or anything like that. So for me, one thing that's really had me spooked is what happened in the first 6 weeks of the year. How basically the entire crypto asset class pumped right off of the open. Now, if you chart at all or you have any charting software, this is going to go back 4 to 5 weeks now when I first started getting a little worried about this. If you go and you mark out a horizontal line, January 1st, the first second, the first tick, draw a horizontal line and look at how little price action there is below that 2023 open on the entire cryptocurrency asset class. It's an extremely effective strategy at times to fade a pump or dump right off of the open of a daily, hourly, weekly, monthly, quarterly, yearly open. It's extremely effective. We have extremely, like almost zero price action below these opening ticks. So everybody's been throwing around, and I think it's been a little bit reckless, truthfully, the 2019 fractal. And they've been saying, oh, well, this is like Q2 of 2019. The bottom is in. Look at that parabolic move. The FTX dump was a deviation. We'll never go back down there. I am not so convinced. I think that this is actually, if we want to talk about fractals, I think it's far more likely, given the macroeconomic backdrop, that we're probably sitting somewhere around really just what happened in early, Q1 of 2020. Very similar market structure. We had a nice deviation and basically arguably nuke from it was 14K back in Q2 of 2019. Bitcoin bottomed out all the way at 6,500 and then had a pump right off of the 2020 open with zero price action below the opening tick, just like we're talking about right now, all the way up to 10,500 And then we decided to nuke. Obviously, you guys know what happened in March of 2020. So I really am in that base case, and I like and appreciate what Ben said. I think he said word for word, I would anticipate another scare in the market. He said, I would anticipate one more scare. And he said it was Q3. I'm of the belief it's slightly before that. I would think it happens late Q1, sometime late next month, or very early Q2. I could be wrong. He could be right. I think we're both sort of expecting something similar. I'm willing to make the argument that we actually take out that I think it'll be a wick. I don't think we're going to range there for too long, but I'd be willing to put it out there that we actually deviate that FTX low because quite frankly, it's just a predatory market. That's the path of most resistance. The path of most resistance is not like we go to 30K. I think the path of most resistance or the path of most pain when we were at 16 and 17K was us going to 25 or 30K because look at all the shorts that got blown out of the water. But now the order books have materially flipped. The liquidation levels have changed. I think that the path of most pain is again now straight back down. And I think that if we were to go back below that FTX low, it would flip the crypto markets literally on its head. And I think it would wreck a lot of people. And I think that's truthfully what needs to happen for the global bottom to be in. So really, I'm watching for some price action to be put in below the yearly open. So for Bitcoin, that's down 16.5K. And on ETH, that's sub 1200. And then I'll look to consider re-entering. And right now, I've actually, for only the second time in my life, flipped net short on crypto. I usually always remain net long to a degree, and I am now net short, and I have been since yesterday. The shorts are doing well so far. I mean, it's only been half of a day, so whatever. I plan to hold these for quite some time and build quite a big position. But I think that there's some serious pain and resetting that needs to happen, and I think that people are getting greedy here at the top of a really wild bear market rally. So that's my positioning. I could be wrong. I could be the fool. If we go to 30K and everyone says, "Wow, you sold 5K too early," well, you know what? I've made peace with it because I think that it has to do with comfortability as well. And from my perch, it doesn't feel smart to be so exposed to something that trades like a high beta of high beta. And eventually that will change. But yeah, I'm looking for some serious pain here. And it doesn't have to happen today or tomorrow or next week. But I think we need to go much lower before we can go much higher.
Thanks, Max. And I want to come back to the topic of downside here in just a few minutes, specifically kind of as how it relates to, the USD prices for Bitcoin versus alt markets. But premise, I want to welcome you up, man. Kind of get your thoughts on the market, what you're seeing, man. And if you have any bias as to what to kind of expect over the next few days for crypto. I know you have your eye on that one summit that's going down today. I think it's today, right?
Yeah. G20 starts today. I said it last week. Once I saw that when we hit 25K, I took that trade. What was it from not the 18.8 trade, but when I got back in, what was it, 20,400s? I can't remember. I had to pull up the receipts. And I sold it at 25 because both bulls and bears started calling for 27 and 28. And that could still happen 100%. But I was like, you know what? 25 is comfortable for me. There's a lot of resistance there because I do think now we can start seeing a little more weakness in the charts and stuff, which I think overall, I'm not on the camp yet of a lower low yet. But I do think 18 retesting now, because the way time works, it's more like 19.5. Y'all remember that 19.5 level everyone was so scared of on the way up, and we just kind of blew right by it. I kind of agree with Max. There was a lot of inefficiencies we left down there, and it's cool. It's okay. You do a nice run up, you like it, squeeze some bears, but at some point now you want to get the people who are late longing, and you want to come down, and you want to set and reset those imbalances, and then we can determine, hey, is this going to be a bull or bear run? Because I do think if it bounces off of that level really strong, I think, and that's from 18.8 up to 19.5, I think, I'm going to be longing there actually for the bounce. Because regardless of whether it continues or not, there will be a bounce at that level. It's just too obvious to see. It'll probably hit up there, bounce back up into the 20s, and that's when we'll decide, hey, is this a bull or a bear run, right? We get underneath those levels. I got a strong support line, former support, And last time we broke down beneath it was the FTX crash, and we ended up making the same exact algorithm. Hey, the double bottom is so perfect. Go look at the daily and look at that double bottom Bitcoin was trying to do before FTX, and then look at how it did the exact same structure. So my guess is we come back into that support that we broke down, and if you're bullish, then you're going to try to create some kind of one more double bottom there to create like a higher time frame inverted head and shoulder pattern. Then you can start thinking about 30K and stuff. Maybe they can't do it from here. I'm not gonna be the first one to say they can or can't. I just know that it was a fun January, February, but at some point you got to say, hey, let's get some action. So then I got charts showing weakness. What's the macro? What can cause Bitcoin to kind of reset? Well, India is hosting G20, and they said they want to make a forefront issue of regulating crypto. Now, that's not saying something gets passed, but y'all know how the news works. China says, oh, we want to go back in the day. We want to ban something. Or India says we want to ban something. You get it. What happens? You get like a little flash rinse in crypto. That could be the move. I don't know. We're speculating here. Don't hold me to it. But I see a macro event where they say, hey, we want to because now we know there's CBDCs being printed out there and they're in pilot program. We know FTX scam just happened. So now they have a bigger reason, especially with India being so... They're not really anti-crypto. They're actually asking for regulations, which I think that's a flash crash, a heavy crash. But then I think that's bullish long term. I know y'all gonna hate me if you want to keep it out of the eyes of regulators, but let's be honest, it's just gonna happen. The normies who aren't into the space like we are gonna accept whatever Jamie Dimon and Warren Buffett or whoever the fuck makes these rules. They're gonna accept whatever they say, right? They're gonna accept crypto when they say, hey, accept crypto, and that's after they loaded their bags. So yeah, I think this is a perfect opportunity where you can have a news catalyst and charts that both say, hey, let's get some downside. Even if you're bullish, you want to come back and retest 18. You don't want to leave that. It's kind of like gaps in the stock market. You want to fill all the inefficiencies. You want to see it actually hold a support. And if there's a big buyer out there who believes in that level, they'll buy heavy at that level. And then we'll see, is that the bottom? So
Great thoughts, guys. Yeah, I wanted to, kind of pivot to, I don't want to be, what's the word? I don't want to sensationalize anything, but, because I know we all kind of expect at least some pullback, some healthy pullback in the crypto market, given the explosive move that we had in January. How that necessarily transpires with prices going lower remains to be said. But I did want to talk about something that Ben discussed in the space while he was here, which was kind of that scare in Q3, right? Kind of what that looks like, whether it's Q2, Q3. First of all, I want to say, regardless, I think that would be, a scare in that time, regardless, would be an optimal buying opportunity right before the halving, right? Because, I mean, that's coming. It's in 2024. That sounds great to me personally, kind of just what the doctor ordered, a big dip or a big scare right before the halving. It's kind of just one of those things you'll have to stack up and actually buy it. But, I really more so wanted to ask you guys kind of about some of the things that he said regarding Bitcoin and the alt markets. I don't know if you guys were in the space, that Ben sees the bottom, the worst case scenario for crypto being, a total market cap around 400, 500 million. I think that's about 50 to 60% lower than we're trading right now. I don't think personally that we're going to trade down to there. But I do think there is something to be said about, money that can still leave the space. And what do I mean by that when I say that? I talk a lot about these altcoin markets being primarily, open interest, leverage driven volumes. It's not really sustainable flows. It's not authentic. And most importantly, it's not spot buying. So it isn't sustainable, right? And that money can leave the market if we do have, a severe downtrend, a significant red day. It will leave the market faster than it would if it were spot holdings at the very least. So I think really it's a very interesting topic that we could potentially, and this is the question I wanted to pose to you guys, and then I'm going to provide a little bit more elaboration to it. Kind of what do you think about the possibility of, maybe Bitcoin has put in its lows of the cycle, right? Maybe it has, or maybe it dips slightly below those lows, but not too much, significantly lower. I do think that the most downside that's kind of left in this market. Sorry, I heard the fire alarm going off in my apartment. So if I have to go, if I have to mute my mic, you know why. Um, it's a very loud fire alarm, so I don't want you guys to have to hear that. But I was just going to say, I think the most opportunity for downside still left in this market is primarily in alts, and primarily from two in particular, right? And I think about the ETH Bitcoin pair. Number one being at support, a support of a range that everybody has kind of been arguing: is it distribution? Is it accumulation? I'm not sure. It's kind of hard for me to agree with this necessarily being fair value for ETH versus Bitcoin, right here at 0.067. We've kind of talked about on this show. I mean, at least my bias is that should trade at least 10 to 20% lower than where it currently is right now. That would obviously be a very huge drain on the altcoin market cap. And then I think another area where alts could potentially bleed substantially is BNB, which is the largest non-Bitcoin or Ethereum altcoin. And you look at the chart, we really haven't retraced much of the bull run. I mean, we have, I guess, but I should say we haven't broken below the range that we formed after the May crash in 2021, which is, very symbolic, which is a very symbolic level for a lot of different altcoins, for Bitcoin, obviously, as well. So there's a lot of drain, I think, that can come out of Ethereum and out of BNB, especially, that could potentially rotate back to Bitcoin. But then when you also add in, the fact that if Bitcoin were to trade something like 18, 19, 20K, and you get real significant movement in these alt markets, especially the ones that have perps here, guys, that's what I'm really focusing on. Those markets are going to get hit the hardest. So I guess the question I wanted to ask you guys, and that was kind of long form, I know, because I had to give my thoughts on it. Max, we can start with you. The question I wanted to ask was, what do you think about the possibility of, the low of Bitcoin being in, but for all of these different alt markets, possibly substantially more downside? And that could also come in the form of regulation, like Ben was also saying.
Yeah, it's a great question. I've been banging the ETH BTC bear drum for probably a few months now. It's a little bit of a highly contested point. Some very, very smart people out there would disagree with me on it, and there's some very, very smart people who would agree with me on it. I believe, from what I can tell, Ben is sort of we're on the same side, that ETH BTC needs a real hard reset at a minimum. Yeah, I just, to keep it really simple, I think that ETH BTC has at least 20% to go to the downside, and that doesn't have to happen immediately. It can be a very slow bleed over multiple months, and I would like to see at the same time Bitcoin dominance continue to rise. And it doesn't necessarily have to be like a regulatory SEC FUD driven event. I think it can just sort of be in the spirit of altcoins resetting in their valuations against Bitcoin as we get closer to the next Bitcoin halving, and then in turn, closer to the next, hopefully, parabolic cycle for the entire crypto market class. So, in regards to BNB, BNB is one that, truthfully, I've fantasized about shorting for quite some time, and I tried to short it a couple times with really small size, and it just didn't work out for me either time. It's a really predatory coin. Somebody's off mute there. I'm not sure. It looks like Premise. I would just ask politely if you could throw yourself. Thank you, Premise. Yeah, you're all good. For me, I think unless you're a really skilled trader and you're very tactical and you're very precise and you understand how these markets trade and you understand what the market makers are doing and you understand all the landmines and booby traps that have been laid out for you potentially to try to short these coins, specifically one like BNB, you got to understand who you're trading against. The best thing to possibly do if you want to be really safe is just set up some sort of pair trade where you can long Bitcoin, short BNB. If you think that valuation is going to bleed, then you can leave yourself a little bit of wiggle room. Where if you're just outright naked shorting BNB USD, you better be really good at trading. I'll tell you that right now. It's taken some really good traders and crushed them and made them look pretty pathetic. So I'm a little skeptical about trying to short BNB USD, but I think there's definitely a case to be made for some sort of strategic pair trade to be set up, because I do contend that those valuations need to reset before we can enter some sort of accumulation phase. And again, I think it's nothing personal. I think these altcoins are they probably have a bright future, specifically ETH and BNB. At least I would hope. But I mean, you just got to remember too with ETH. Think about what happened before the last cycle. ETH BTC bled sub 0.02 in its valuation. So I keep thinking back to that, and I say, really, are we in some new paradigm where ETH BTC attempted to bleed down after the 64K top on Bitcoin, and I think it went sub 0.05, but then immediately recovered. Is this a distribution up here above 0.065, or is this some sort of or is this an accumulation up here and we're about to break out, or is this a distribution? Are people selling their ETH back to Bitcoin here? I think it's probably people selling ETH back to BTC here, and I think that that's probably where the side of smart money is doing. So yeah, absolutely. I think these valuations for alts against Bitcoin are going to get crushed in the next 6 to 12 months. You just got to be strategic about it. There's definitely alts that can outperform, but I think the large caps, especially the ones that never really gave back too much, during some of this bear market, they probably have quite a bit to fall.
Yeah, I would agree with that, Max. And it's pretty clear that people love speculating on alts, ourselves included. It's very much reflected in the space's behavior. Every time we get, any sort of green candles, people immediately rush to buy beta rather than buying, ETH and Bitcoin, which perhaps would be healthier for the space. And I think that the ETH Bitcoin valuation is probably a little bit symbolic of that relationship, right? The fact that it's essentially been at an elevated level for, how long has ETH Bitcoin been in this range? Like 2 years, I would guess. We had the one really vicious fake out, with the 3AC capitulation, but I think that's a little different. But I feel like I said, I do feel that range that we're trading in for as long as we have being elevated is symbolic of the speculation that we love to enjoy. But I also think that a breakdown or breakout of that range is going to be equally symbolic. But Premise, what are your thoughts on that? The possibility that, the low for Bitcoin could potentially be in, but that alt markets have substantially more to give. Just looking at some of these valuations against Bitcoin, looking at Bitcoin dominance and similar metrics.
Yeah, man. Like I said, I won't be convinced that the Bitcoin bottom isn't in until it deviates back below the levels I got marked out, and I want to retest those levels so we can get that out of that picture into our head to see whether it is or isn't. When it comes to alts, I have zero opinion on how alts need to behave, right? Like, I just let alts do what they want. The moment Bitcoin reclaimed that 18, alts just start popping off like they do. So there's going to be big dips and rips. But I remember Bitcoin when we did break all-time highs and went on a bull run. There were some old alts from back in the day, EOS, TRX, some of these that didn't go on runs. They just did not. So you can have alts that do absolutely nothing. I do think that if the extremes are over for crypto, then we can't expect every single one to behave the same way. TRX, EOS, XRP started doing a move, but then the SEC thing happened. But you had a bunch of alts from back in the day that did not do a new move. So just because Bitcoin sends does not mean, in my opinion, that alts have to send. If there's just a shitty alt project that doesn't have a strong market maker, it's just not going to move. Just like we saw what happened with TRX and these other coins last time. Only those that will move are those that have the interest. So I just think as long as Bitcoin is above 18, alts can do it exactly whatever they want. They can go on their own runs. They can get random announcements. There could be a brand new coin. What was that, Bone coin or something? Like, you could have brand new coins do their own thing. With Bitcoin, it's all about, keeping an eye on a level. If we're uptrending, if we're not making lower lows and lower highs, then, I'm going to assume we're making higher highs and higher lows unless we're just chopping sideways. So this pullback is going to be very crucial to determine that for Bitcoin, though. This is the first pullback since the breakout. or June. Oh, and by the way, it hasn't even happened yet. We might be up at 27K tomorrow while we're still speaking. And that technically we're not fully done yet. So we'll see what happens with that.
Is this the complex pullback meme I keep hearing about? Or is that a little bit lower? I hope we get that. I'd love to become a buyer. I said on yesterday's show that if we pull back to like 18, 19, 20K, and then we just do nothing but range for, like 2, 3, 4 months, I would be so bullish. I would be so bullish if we did something like that, guys. I really would. This is a very, very important pullback, like Premise said, for where it ends up. I think for now we're still in a range, up here. But I do think eventually that range is probably going to break. I think probabilities favor the downside given the look of equities right now. And so it's a matter of, like I said, like Premise said, what does that pullback look like? Does it come into 21.5 again? Does it stop at 23K? Does it potentially come all the way down to 18, 19K, which there are plenty of inefficiencies and liquidity that indicate that it could potentially do that. But yeah, I am going to be paying also just very close attention to the relationship between Bitcoin and alts, when that pullback comes, if that pullback comes, because, like I just said, if a breakout or breakdown of the ETH Bitcoin range will be equally symbolic, right? And if if Bitcoin breaks above 25K, I have to imagine that it's probably going to be conducive to an environment that that ETH is going to outperform. I just have to think that's the case, right? And that would be kind of centered around the idea that we're kind of seeing a ton of small bounces. We are essentially view it from the perspective that we're all still within the previous cycle, right? We have not reset yet. We're just seeing, small bounces, smaller and smaller bounces before we, find a real bottom. Whether that bottom is denominated in sentiment or USD prices is to be determined. But, the small bounces that we see with alts outperforming, and eventually, when we hit that bottom sentimentally, we could see that eventual rotation back to Bitcoin. But it's kind of funny because people love to meme Bitcoin dominance, which is basically just, by the way, inverse ETH Bitcoin. But people love to meme Bitcoin dominance. But eventually, it's going to break out of that range. You would have to think, and it's not going to be a good situation for all markets when that happens. I just kind of struggled to see what the catalyst for that is, and I think I will say kind of to play devil's advocate to my own bias and the alternative view to this take is that I guess it doesn't have to necessarily be a push-pull relationship with Bitcoin so definitively, to mark cycle tops and bottoms. I guess it could be a longer term, more symbiotic relationship. Obviously, you'd have to give a little bit back to Bitcoin. But I think that could be especially the case, given the increasing amount of alt markets that we have to speculate on, and increasingly more ways for us to speculate on them. I really think the behavior between those two parties is going to be such a story, or such an important story, by the end of this year. If regulation comes, I think the argument for Bitcoin dominance is obviously immensely strong. I should add that, but I don't know that. I don't think the SEC is just going to come out and slap the security label, on every non-Bitcoin token. That would just be, for one, I have a feeling they could take that up with the Supreme Court from all the lawsuits, eventual appeals that would lead to, an appellate courts, yada yada yada. I don't think that's going to happen. I just don't think that's going to happen. But I do think that the relationship between those two is going to be worth paying attention to. And my bias is that, a deterioration in the prices of more speculative assets is ultimately going to prove to be, one of the things that we look at for bottoms. Real quickly, though, guys, on the same topic before we pivot here, what do you think? This can be a rapid fire question. What do you think that scare could be, that Ben is kind of talking about in Q2, Q3? I think, Max, you mentioned it could be something related to equity markets. I know there's definitely some worry around debt markets, forex markets right now. could be Nance potentially. I think that's probably more so. I think that the Nance FUD is more than likely going to be overblown at this point from a regulatory standpoint. CZ is going to do what CZ is going to do. I think the biggest tail risk for Binance would be, how does the market react if CZ were to step down to ease some of that regulatory pressure? But do you guys have any thoughts on that? What event we could have to, I don't even want to use look forward to later this year, because that's not how I would characterize it.
So to be clear, I if I hear the question correctly, you're asking us to dubiously speculate on crypto FUD that will send us down dramatically. Okay, got it. Well, let's get crazy here. I think we could say Binance is indicted and they're insolvent, and something along those lines. I think that we'll bring back the Tether FUD just for fun. You can never go wrong with Tether FUD. It's one of the oldest in the entire asset class. I think you could see Mt. Gox Bitcoin flooding the market, and that influx of supply. Maybe if we're like right at critical support at like 19K or something like that, then we'd have a couple 100,000 Bitcoin at support flooding the market if they don't do it appropriately. I think that equities collapsing, there could be a contagion to crypto. Unlike when crypto collapsed due to FTX, the contagion didn't really spread. I think that it would work the opposite way, where if there's some sort of credit event or crisis in the equity markets, I believe that would transfer over to crypto. And I think ultimately I think there's potentially going to be some event or some FUD, but I think you probably don't really even need there to be a major event. I think you probably more so just need people to be reckless on leverage, and for there to be a cascade, and that can do some damage alone. Of course, it helps. It helps the FUD if there's actual FUD, and it's not just like, there's ridiculous amounts of liquidations below us. But yeah, I think I'd probably be leaning, if gun to my head, what's it going to be? I would say probably just contagion from equity markets. I'm leaning towards Binance being safe. I think that they passed the stress test in my mind. I think they processed over 10 billion in withdrawals when they had influencer-induced panic and FUD. They were really, I mean, they handled it well. I mean, they processed more than literally any bank, every bank in the entire world combined probably could have handled. Binance single-handedly handled, I think it was 10 to 14 billion. I don't remember the exact figure, but they passed the stress test. Some people think they're going under, but I feel like they're probably fine. Gun to my head, they're fine. But yeah, I think it's really just going to be like an equity market contagion. And I think that we are in for a hard landing. And I think that people are going to have tough decisions to make, and they're going to say, well, I can't afford my apartment or my mortgage anymore, and I can't afford to make my car payments. Do I want to own Bitcoin, or do I want to own ARK, or do I want to just sell so I can cover like 6 months of car payments and my apartment? And I think that alone, the recession, is enough of a FUD to send us down dramatically.
Yeah. No, I would agree with that, Max. I had a little note written down. I can't remember what it was or where it went, but yeah, maybe I'll remember it while Premise is kind of addressing the same question. But yeah, Premise, just asking you to speculate here. Have some fun, a little thought exercise. What do you think could potentially, other than I feel like equity markets are an obvious caveat or overhang, I should say, on crypto potentially this year. But I swear, if crypto got, bamboozled by equity contagion after what happened last year, I think that would just make me mad. I think that would just make me mad. I don't know about you guys.
Nah, I don't know. I would have said back in the day equities, but since some of the economic data, CPI stuff like that came out very unfavorable, Bitcoin kept running into all of that while equities started making its tops and selling off. So I don't want to say maybe equities. I would just say regulation, man. I'm actually the only person who just wants to get that over with, because there's no way we can have a sustained bull run in the future when every 2 months or the talk of regulation and banning fucking Tether keeps popping up. So, is this the best time for it, right? I harp about the G20 thing. We harp that FTX just happened just last year, where a lot of people, a pension fund in Canada lost money due to that, I believe. Tom Brady and them got, made to look like fools, which, by the way, sport money. I love how they always get sports players to say, hey, invest in your sport. 80% of NFL players go broke. That's Tom Brady. The point is, it's like, that's not smart money. That's kind of low, more on the dumb money side. I'm not, I don't want to call them dumb money, but, they don't know what they're getting into. They give it to these scam artists, Wall Street fuckwads who sit there and put their money in shitty investment portfolios, and that's what happens. Someone should have told Tom Brady, don't put, that much of your net worth into a single exchange. It just seems kind of crazy unless he was like writing it off or something and actually just embezzling or, avoiding some taxes. I don't know what he's doing. Maybe he's more savvy with crypto than I think. But to me, that sounds kind of stupid to do. So I don't know, man. I think crypto can have its own damages from its own ways, and we know the big thing hanging over is still the regulation talk. Sounds like what then Paxos can no longer print BUSD. Bitcoin's still holding up from that, by the way. So maybe just more regulations is what keep weighing it down.
Yeah, and I tend to agree with that, frankly. And I kind of wanted to say I feel like, and you said this before too, Premise, that we know that Tether is fraudulent or was fraudulent at some point, in their existence, but it's kind of just like a meme at this point. They're more than likely, I'm personally of the opinion that both Binance and Tether, I mean, they're going to be damn tough to take down. And if you're talking about, either of those going under, then you have much, much, much larger problems than, the prices of what your denominated altcoin USD net worth might be. I will say, I think, if we potentially trade like 30K here without a pullback, I think the opportunity for systemic risk within the space probably increases just because, we have some pretty stupid people here in crypto. I'm just being honest, calling it how I see it. Look at one person blew up like what, 10, 12 billion in that we know of in customer deposits, just being a degen. So, if we go up more, before a pullback, you start to get some of that retail belief. I have no doubt that some very bad actors and greedy people within the space will overextend themselves and potentially create a situation that, we wouldn't want to see, kind of on the back that, okay, yeah, that was the definitive bottom, so I can absolutely lever up here. I hope we don't see something like that. But yeah, guys, I kind of wanted to pivot towards one more question here to end the show. And I wanted to ask, it was also on the back of what Ben was asking, or kind of what Ben was talking about, in the sense that, the Bitcoin narrative is particularly malleable. It's been very flexible, right? It has taken on many shapes and forms. Digital gold, is it currency? For me personally, I think it's going to gravitate more and more towards, an asset where you feel comfortable, storing your wealth in. Just probably a little bit more of a speculative vehicle than you're typically used to seeing from such a storage or from like a wealth storage, asset. I don't know how you guys feel about that, but I do believe that the next Bitcoin bull run is going to be, strongly driven by the values that initially made Bitcoin such a hot asset, 8 or 9, 10 years ago. Privacy, the immutability of it, and those aspects. How do you feel about that, Max?
Yeah, I agree with you. It'd be nice to see Bitcoin get back to its roots in a way. I think a large driver of the next bull market, I do agree with Ben, it will be more institutional adoption. I think it will become a small part of everybody's portfolio. And I think in order for Bitcoin to really sort of reach that terminal velocity or escape velocity and just really become a well-respected asset where, the TradFi guys, still some of them, they look at it and they kind of scoff. How many people have we had on Market Check, which is a little bit more equity market skewed, where they say, well, normally I wouldn't talk with a guy with Bitcoin in their name, but you guys seem pretty cool. It's because there's this stigma still attached to it. for some people that haven't spent the time to really look into what it is. And that's really one of our missions here, is to sort of attempt to destigmatize it and help push Bitcoin into the spotlight on a little bit more of like a traditional investment basis, or the stage. So I think really, in order for there to be institutionalized adoption, the custodianship issue is a big problem. We need better solutions for self custodying Bitcoins. Maybe that's smartphone integrations. I don't really know. That's unfortunately a problem that somebody smarter than me has to figure out. But people read these horror stories, about losing crypto. And I think that a spot ETF solves a lot of those issues. So I think in order for Bitcoin to really, really pump up next cycle and really show everybody what it's made of, and what it can do, and sort of put all this recent FTX crap behind us, which unfortunately that news made its way into the mainstream, but a lot of the good stuff doesn't. Everyone likes to hear the disaster scare stuff. But we need those passive flows, and you're not going to get passive flows necessarily from something just like a Coinbase or a Gemini or whatever. You're going to want to have it integrated into TD Ameritrade and Schwab, and it needs to be as simple as through your equity brokerage account. You can just go and bid Bitcoin. So um, I actually don't even remember specifically what your question was, but I think maybe I danced around it a little bit. Can you remind me? Did I answer your question there, Tommy?
Yeah, I think so. I was just kind of asking more or less of what the, really the headline narrative, for lack of a better phrase, would be for Bitcoin and its next bull run, especially if it's a narrative that could potentially drive Bitcoin into, a 6-figure price point.
Yeah, I would say maybe just more. I would say if we do get some sort of disaster in the equity markets or a credit event, or I know Premise has highlighted like the FX missing money. Was it like trillions of dollars of just like missing money? I think that potentially if those narratives end up materializing and we actually do get some sort of widespread Lehman Brothers on steroids, but it's a little bit more to do with policy and monetary policy specifically. I think that people, I would hope, could then choose to opt out of a currency dictated by a bunch of publicly elected individuals that, quite frankly, don't understand monetary policy to the degree that they should. So you can opt out of a highly inflationary and manipulated fiat currency and choose to store your wealth in something like Bitcoin. But I think, again, for that, it comes with a couple asterisks and what ifs, and we do need an easier on ramp. But I think if we get that, then absolutely it can just, I still like going back to that narrative of digital gold. I know some Bitcoin guys don't. I actually do, because I think it's easy to understand and it's easy to explain. And a lot of older people, they understand why you would want to own gold. So if you can just convince them and explain how there's a lot of similarities between Bitcoin and gold, and there's an easy on ramp, I think it makes a very compelling and easy case.
Premise, I see you got your hand up. I want to get you.
I just want to comment on Max.
I was just going to call Bitcoin Zoomer Gold. It's kind of my nickname for it. Sorry about that.
Now, I was going to comment on Max. We already do that with Jay Powell. Technically, this guy is very powerful. He has the money printer, right? So, like, I've been, how long I've been following that guy, but yeah, that missing money is something I think they can kick down the road, but they're already piloting a cure to that. The fact that it's missing is cured with CBDCs. That's just, you can see it from a mile away. They're already creating the solution to the problem they created.
Yeah, you're absolutely right, Premise. And Max kind of had me thinking that, at least, with what he was just saying a few minutes ago, that, the next Bitcoin bull run might just be catalyzed by actual, we talk about speculative tech and speculative growth cycles. Well, what if this next growth cycle is the one where you see real adoption of Bitcoin because external factors have finally, forced participants to say, okay, there's very clearly fundamental value in an asset like that. But Matt, I see you've got your hand up, and I know you've got some passionate thoughts about this subject too.
Hey, thanks for having me up. Um, let me piggyback Max's point. I think he makes a great point. Now we were all a bit too young to watch gold's rocketing rise in the 2000s, but for some perspective, in 2002, gold was only a $2 trillion market cap, only 2 trillion, smaller than Apple is today. And then you saw over the next 10 years it go from 2 trillion to 12 trillion. Did we all of a sudden use 500% more gold in the world? No. Did it all of a sudden become like, just half of the weight of your computer is now gold or in every car? No. No, we really didn't. It's the greater populace realized, hey, I don't have enough money to store my wealth in another house, nor do I want to bother with the upkeep. Hey, we just saw the massive tech bubble pop. Hey, we just saw the massive financial crisis pop. I'm not smart enough to research a ton of different corporations. I still don't understand what's a fair value for a price to earnings or et cetera, et cetera, et cetera. Gold was the easy button, and that's why you saw it go a 500%, 2 trillion to 12 trillion in 10 years. Barely a hiccup in the financial crisis if you zoom the chart out. That is a super powerful narrative. And like I kind of roll my eyes where people say like, oh, that's only going to that's only going to interest boomers. No, that's super valuable. That's super useful. And I think that's a strong narrative for Bitcoin going forward.
I think it's a really, interesting discussion kind of on how, Bitcoin adoption can kind of take shape, not just with an older generation, but also a younger generation, right? Because the older generation is, they're going to value kind of the aspects we've been discussing about Bitcoin, protects your wealth, even though, Bitcoin has a ways to go with that. I mean, let's be clear here. It's still, a little bit rather speculative, but I feel like as an asset, it can find a niche in, like I jokingly call it Zoomer gold, right? My generation of people, we have, people. What else would I be? I mean, my generation personally, I guess we just lost premise. He had to head out, but we very much like yield is very important, right? Or at the very least, when you hear people talking about the prospect of building wealth, everybody is shilling, like just stick your money in an index fund, and over time it's going to grow into this or that. But we haven't, people in my generation, I guess not, definitely not as adults, but I'm not a Zoomer, just for the record. But Zoomers as well have not been put in a situation where they've really had to, protect their money, or where they have felt like their money was not necessarily secure. I don't know. I feel like, Bitcoin's kind of a happy medium there, right? It's, maybe it's a little bit speculative. You can get some of the growth over time that you would kind of expect, if you are trying to, beat the rate of inflation. As many, people my age and Zoomers are trying to do, but you can also strike kind of that happy medium there for a safer asset, an asset that kind of stores your wealth. And I really think Bitcoin can kind of fit right in that little niche, but it's definitely going to need some fundamental catalysts before it can potentially get there.
Well, I think that's why you saw so many Bitcoiners trying to move forward the regulatory march of progress. Premise's point before he had to leave, and why there was so much drive and interest in a spot Bitcoin ETF. We'd be foolish not to say that gold didn't absolutely benefit from its GLD ETF in the early 2000s. And then to Max's point, I think that's what I think that's what our younger generations want. It's not a new GUI on a new digital wallet, or it's not a new version of Ledger or Trezor. No, they want an easy button. That's why index fund investing is so popular, because they don't want to read through balance sheets. They don't want to read through earnings reports. They just want to know, hey, if I set aside 20% of every one of my paychecks into this asset or index or whatever, I know I'll make substantially more money over time. And when you have that easy button for Bitcoin, it's going to work out the same way.
I agree. I actually think it'll probably be even more so than it will be for stocks. I think people my age would, you're talking about potentially climbing the social hierarchy or the social class ladder. You're not going to do it through index funds, right? But you can see what speculative tech has done for others. Maybe it can do it for me. So I'll buy Bitcoin, continue to buy crypto. If there's an easy, which is probably, a pretty big deal of why you're seeing, more and more altcoins listed on Robinhood. Just makes it very easy to buy. But I think it can be much easier to continue buying Bitcoin, at least, from making it more, less taboo, I think is probably the right word, even though, it really shouldn't be. It's just kind of a negative stigma with the media. It does seem like we lost Max. I think he had to run. The show did go pretty late today just because, Matt, before you got in here, I don't know if you saw, we had Ben Cowen in here.
I did. I caught some of it. Excellent discussion.
Oh, yeah. No, amazing that we had him on here. Like I said, he's like one of those guys that, when you first get into crypto, he's like, he's definitely one of the people the algo is always showing you on Twitter. But, it's hard to get into crypto, Bitcoin, and not, and I guess I know they are separate, but, I group them together for the sake of discussion here. He's one of those guys that, just very recognizable. So we're very happy we had him up. This space has technically been running for probably like 2.5, 3 hours. So I want to give a shout out to
been 3
I was going to give a shout out to our producer here because you've been on a marathon grind, man.
I live for this shit, man.
We love our producers, guys. But I think that concludes pretty much all the discussion we had. Thanks for coming up today, Matt. Thanks for everybody who tuned in to Market Check, as well as the Crypto World Radio. Both will be back tomorrow. Crypto World Radio, the timing will be communicated through our Discord and Twitter as per. And Market Check is usually on at 11 a.m. Eastern time every weekday. And we'll have I Am Trizzy tomorrow, who, if you don't know who that is, he's a fantastic trader. I'm really looking forward to having him on. But yeah, other than that, we've got Market Talk with Carter and Max, 4:15 Eastern time. We didn't really get into any legacy market talk on today's show, but I'm sure Carter will. And yeah, guys, I think that concludes everything. So have a great rest of your Wednesday. It's snowing outside for me, so I'm probably going to go take a stroll, honestly. Going to have to bundle up, though, because it's pretty damn cold. But yeah, thanks so much for tuning in, guys. Have a great rest of your Wednesday.
Is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times. When I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.